and video. You can see me here. All right, great to see you all. And you should be able to see a big blue screen in front of you that reads Mastering Long-Term Account Growth. That is why we're here. All right, everything is good, most excellent. I've been taking a look at the chat. I see a lot of folks logged in, some new names, some familiar names. All right. Glad everyone got a chance to be here. And I'm going to turn my big blue screen in front of you. There we go. I'm going to turn my long-term account growth. I'm going to turn my speakers down so I don't hear myself coming through. All right, welcome, welcome. We are here to discuss mastering long-term account growth, stocks, ETFs, and indices that you'll be holding for months to years. So a shift, gang. Let's think about this long term. We got a lot to talk about today. So thank you so much for joining me tonight. For those of you that don't know me, my name is Raghee Horner, and I have been trading, and it sounds even crazy to say this, for over 35 years. And I look forward to sharing with you the tools and the strategies that I have learned to making money grow over the long haul. Whether you're new to the concept of long-term growth, often called investing, or if you're looking to refine your long-term strategy, tonight we're going to discuss practical and actionable insights. So let us get to it. Super stoked to cover this with you all. So first of all, let's tackle what the big picture is. What is long-term growth? So typically, it's focused on buying stocks, ETFs, index funds, and other growth-oriented assets. Individual stocks, common ones like Apple, Microsoft, Johnson & Johnson. We saw Nvidia tipping the 4 trillion market cap, right? ETFs, index funds like the very popular SPY. Dividend stocks, we're talking about income and compounding. The bottom line is this: buy a stock or an index fund, hold it for years, and here's the important part: let it grow. So that is what long-term growth is, and that is what we're here to discuss. So why does long-term growth work? I mean, I think we all know it does, but maybe we need to discuss some of the aspects of it. Compound growth. So appreciation generates more growth. The stock of the price, add in dividends. So let's talk about an example. Let's say you took 10,000. I'm going to grab my drawing tools because what's a discussion without some awesome drawing tools? Let's say you take $10,000. It could be 100,000, and you invested it in the S&P 500 in 1990. We all have these what if scenarios, yeah? Today, over 100,000, assuming you've reinvested dividends, and really important, no panic selling. Emotional control. It's a big one. There's less temptation to react to volatility when you have the long-term growth in mind. It protects you from the noise, it protects you from the panic and the hype cycles. It's both, right? Those sell-offs and those crazy rallies that sometimes leave traders holding the bag, right? Long-term mindset avoids the noise of market movement. And we're talking about a mindset here, gang, not just a trading strategy. It avoids the noise of market movement. It's not reactive, it's patient and strategic. And I love those two words, especially together: patient and strategic. All right, so here are the top 2 reasons. There might be a myriad of, but these are the killers. Top 2 reasons why long-term investors struggle. Number one, underperforming portfolios. They're not seeing their investment grow as they had hoped. I think we've all been there, maybe. Often, the cause of an underperforming portfolio, frankly, is due to dollar cost averaging. Buying at regular intervals with a set dollar amount, regardless of price. You know, I'm going to buy X number on the 15th of the month, dollar cost averaging. Many use this kind of approach, this dollar and calendar based approach. And here's the problem: sometimes you're overpaying for a symbol because you don't realize that timing the market is possible. We always hear all the time, you can't time the market. Keep that in mind because we're going to talk about it. So, again, you're overpaying for symbols because you do not realize that timing the market is possible. We all understand the concept of buying items on sale, right? But somehow, when Wall Street has a sale, few are those who go shopping at that time. This is step one in timing the market. Who's heard the old saying, Wall Street's the one place they throw a sale and nobody comes? With time-tested strategies, you will learn how to identify these sales, because that's exactly what we're looking for. Buying at lower lows and ultimately having an outperforming portfolio, because in fact, you are timing the market. So let me show you what I mean. All right. Number two reason why long-term investors struggle, right? Long-term traders are disappointed with their returns, right? They're always flailing. So missed opportunities, and this might sting a little bit, but let's talk about this. Traders, investors, they didn't understand where to look and when. So let's look at this list for a moment. It's a big list. And if you're wondering what this is, it is the top 30 performing stocks, or is it 30? Yeah, of the last 30 years in the S&P. So you see the symbol, the name of the company, the industry they're in. The industries are varied, right? There's no magic to the industry here. The IPO date, the 30-year total return. Some of these are 5 and 6 figure percentage returns, gang. Wrap your head around that. And then annualized, every one of these symbols handily beat the S&P 500. So that's the benchmark we're always after. Can we beat that average 9 to 10% of the S&P 500? Every one of these, even Decker's at the very bottom, was just over 18%. At the top of the list, believe it or not, Monster Beverage at 32.5. Now, here's the thing. Again, going back to they didn't know where to look or when. Who here wished, if we could jump into a time machine, who here wished they had bought Nvidia just 10 years ago? Heck, just 2 years ago. How about Apple? How about Amazon? I know that stings. Yeah, they might be in your portfolio in an S&P 500 ETF or whatever grouping you might have, like XLK, earning maybe that 10% per year, which is great. Don't get me wrong, but I don't know about you, but don't you wish you had a few of these individual stocks sprinkled on top to help your overall performance? Like I said, the very bottom of the list, that's 18%. I look at this and I think, my gosh, yes, you can time the market, and yes, there are some real outperformers out there. So you look at this list, you think, but only, right? Well, there is a fix. So while we're lamenting, gosh, Rog, I really could have grabbed some of these names. I just didn't know how. There is a fix. There are always new opportunities around the corner. Believe me, I've been doing this for 35 years. There's always something. So there's always an opportunity around the corner to find these type of symbols. It may not be this 30 again, but these types of symbols. And here's the trick, and it's not even a trick. It's kind of common sense. Learn the strategies today so you can catch those chances tomorrow. Learn those cues. Learn the characteristics of names like this, where fast forward years from now, we're going to say, yeah, I saw this before it took off. And that is what we're going to be talking about tonight. All right. So now we've set the scene. Now we know what we're trying to do. So what timing the right symbols looks like. So like I said, I've been doing this a minute. I bought Amazon, and not all of these are 30-year, 20-year. Take a look at the dates. I bought Amazon at $85, it's split adjusted, in May of 2019. Last time I looked, it's right around 220 bucks. So these might be off. I didn't update them according to today, but this is generally where they are. And that benefited, in addition to buying at 85 and having it at 200, this benefited for a 20 to 1 split. Who doesn't want one of those? And that was in June of 2022. So not only did the stock appreciate, now I've got a 20-time position in terms of shares. I bought IBM 3 times between 2002 and 2008. Every time it went to 70 bucks, I bought it. And then we got the 2021 split. IBM is currently just hovering under $300 a share. All right, so scoop it up at 70, scoop it up at 70. Just kept scooping it up. And then today, almost $300. Exxon, this is one of my favorites. Exxon, I scooped up at 60 bucks in December of 2021. It's at 111 bucks. Now, this is really cool, right? But Exxon also pays a dividend of approximately, I think it's 97 cents, 95 cents per share. So I get $1 per share for just having it, as this thing has moved up in value. I bought Tesla at 35 at March of 2020. We know where Tesla is. It's been all over the place, but it's still way above 35. All right. And that's great. Okay, Rod, going back down memory lane, it stings a little bit if you didn't take advantage of some of these moves. But what about now? What about recently? Well, how about April of this very year? SPY, the S&P ETF at $490.58 per share. Last time I looked, we were over $620 and moving towards and through all-time highs. And that was just from April of this year by understanding certain characteristics of the kind of stocks that have the ability and kind of ETFs that have the ability to keep going. So what we're doing here is leaving that dollar cost averaging mindset way behind. So tonight we're starting a journey on how to optimize understanding what symbols to look at and identifying the sales, right? Keep that in mind, the sales, when to buy the symbols that you'll likely have in your long-term growth account for years to come. All right. And that is what timing the right symbols looks like. All right. So, well, for those of you that may not know me, who am I? And frankly, Rob, why should I listen to you? Fair enough. I'm a trader. I'm a teacher. I'm a mentor. I love studying the markets, like I'm sure many of you do. I train one-arm push-ups are the secret to becoming a great trader, if you didn't know, and practice, lots and lots of practice, 35 years worth of practice. So I've been trading now for 35 years. I love trading, and it's been a part of my life since I was introduced to trading at 15 and a half years old. And as I really just completely immersed and engrossed myself in that world of trading, studying, practicing, and frankly, succeeding, I also came to learn that I'm equally passionate about sharing my knowledge to help other traders develop their skills, overcome their challenges, achieve their goals. I love being a mentor, a teacher, a tutor, a trading partner. Frankly, I love when you and I beat Wall Street, right? I love when you and I can direct our own money because no one cares more about your money than you do. So as I continue to spend every day of the week trading, I simultaneously spend every day of the week live trading with people like you in the Sector Secrets Mastery. This is my dojo, right? Where we train, where we fight it out for all things trading. So what do I mean by all things trading? Well, what I mean by that is commodities, futures, options, stocks, ETFs, day trading, swing trading, long-term trading, charting, risk, position size, timing, price, volume, economic events, the whole thing, right? On and on. I've mastered the skills of becoming successful by trading all of these asset classes in a very specific way. That's the most important part. And that has led to my success in trading every asset class on every time frame. Right? Investing long term is a time frame, right? I've never blown up an account. I don't say that to brag. I just say that because there are strategies to this. I've never blown up an account and I've never had a losing year. Now, granted, I've had losing months. Of course, I've had losing trades, but I've never had a losing year in my entire career, nor have I blown up an account. So from where I'm sitting here, capital preservation, right? That's who you're talking to. Someone who really values her money and takes care of it. Every day I get together with hundreds of traders to help them achieve the goals that they're looking for. There's endless information out there. Who doesn't know that? It's on and on. And yet so many people are super frustrated, not making money, or even worse, and somebody might be nodding out there, losing their hard-earned money because they bought the wrong symbol at the wrong time for the wrong price simply because they didn't have the knowledge, the strategies that they needed. And that frustrates me because I am rooting for you and me, right? I'm rooting for us. And then there's those people that simply missed out on opportunities like the ones we were just talking about. I mean, how much fear mongering is out there? When there's opportunities, what do we always hear? Everyone's talking about the end of the world, the sky is falling. Of course, people are missing opportunities because there's just so much fear mongering out there. I've done the homework for you so you can take that trial and error and that uncertainty off the to-do list, right? Focus on learning the skills that you need to take your investments to that next level. So I know there's a lot of things I've thrown at you already, so hold tight and keep in mind that tonight I'm focusing on these sort of investor type, long-term growth mindset and strategies, the type of people who may not actually even realize they're trading, even though they might be thinking long term already. So picking a symbol, wanting to hold that symbol for months to years. So truly, tonight's conversation, frankly, gang, applies to everyone who has money in a brokerage account, a savings account, and wants to find the best place to put their money to work, to watch it grow. And here's the important part, without having to constantly babysit it, continually monitor those investments. That's actually counterproductive. So let's get into what it is that maybe is holding some folks back. And that's kind of a hidden in plain sight truth. You are already probably a trader, right? You are already a trader. Most people will say, no, Rog, you got it all wrong. I'm not a trader. Trading is risky. Well, keep in mind that volatility, regardless of what you're doing, is perfectly normal. Long-term investing doesn't mean no risk. It means you accept the risk with a plan. And my job is to avoid risk and manage it wisely over a longer period of time, right? The truth is, if you're buying a stock, an ETF, an index, a mutual fund, you are a trader, right? Think of it this way. Day trading, swing trading, those are short-term forms of trading. But longer-term trading is still sort of trading. Buy low, sell high. It's just at a different pace, right? The difference is the time frame and the goal. So let's kind of talk the language that we know we need to turn the corner on what it is that we want out of our money. So what is a long-term trader as we kind of shift into really leaning into what it is we're going to do? A long-term trader buys and holds, hang on one sec here. Um, Answer the question about, oh, minimum account size. Oh, okay. Yeah. By the way, gang, some of you may know the Trish Boss, the famous Trish Boss. She is here in the office. For those of you that don't know, Trish Boss is the right hand to all things the Sector Secrets Mastery, and she is checking all the questions. So what I would love to do is get through this discussion, and then we will answer questions. We will absolutely have time for questions with this presentation. I want to show you some examples, but did you want me to answer that now?
Yes, it's a
good time. It's a good time. All right. So, so there's a question about a minimum account size. All right. So what is a minimum account size? I'll tell you this, just like any business, you don't want to be undercapitalized, right? That said, because we can buy fractional shares, because there are other ways to enter the market without buying, look at Netflix, right? Do we have to buy a $1,400 stock? Some of these stocks are expensive. I think Microsoft is 400 and change. I would say start with no less than 5,000 to 7,500. But really, you can start with darn near any amount if you're doing things fractionally. I don't want to divert from the main topic, but yes, I mean, almost any size account. Now, obviously, the larger your account, the more shares you can buy, the more dividends you can benefit from, the more positions you can have. But we all got to start somewhere, right? So a smaller account, 5,000, 7,500, very realistic. Even smaller than that, I'll tell you this, gang, timing with something is better than doing nothing. And I truly believe that everyone needs to be able to participate in this type of long-term account growth. It's in everyone's best interest. So those are things that I would say, don't let the account size be what holds you back. But, obviously the more you have, the more choice you have, right? But you can start anywhere. As an aside, I started trading with $1,200. So you can start almost anywhere. All right. So what is longer term or long-term trading? So long-term trading is buying a position in a stock, ETF, index. Once you buy a symbol, what is that act of buying the symbol? It's a trade, right? It's just a trade. So you hold it then for 6 months or longer, oftentimes for years. So why? Think retirement, think buying a house, a college fund, right? Why would I want this money to grow? Focus on steady growth, not speculation. I know folks out there are always looking for shortcuts, and that big winner is always so clear in hindsight. But what I'm talking about is the real world you and I live in, right? Steady growth, not speculating on some high flyer. We're looking for a beating the S&P steady type of growth. The strategy is to buy quality symbols, right? Not meme stocks. And let time, and that's the superpower, gang, let time do the rest of the work. Compounding, as I say, is the eighth wonder of the world. Well, time is part of compounding, isn't it? The goal is steady growth with lower maintenance. In fact, that lower maintenance isn't just a pro, it's a necessity. We don't want to micromanage this stuff. So, lower maintenance and lower risk, right? And the approach is stay still and watch it grow. And I love that. That should be on every desk of a long term trader. A little sticky note that says stay still and watch it grow. So I've talked a lot about some of the mindset shifts a lot of folks need to make. So let's take a look at some real trade examples, long-term trade examples. And as I go through them, and I'll reiterate this, these examples are, except for the ones that I mentioned earlier, what did I do in 2018 or 17? What we're going to talk about now are trades that we have taken. These were alerts to people that are part of this type of trading approach that I have been doing for about a few years now in the Sector Secrets Mastery. So I want to make everyone clear. Everything I'm going to show you, other members participated in. So keep in mind that what we're going to be talking about tonight are setups and trades that I've taken along with members who are part of the Sector Secrets Mastery world. All right. Some of you may not be familiar with the idea of charting and, look at all the colors on the screen. I get it. You may not be familiar with the idea of charting and indicators, and those are all those lines and colors and dots you see all over my screen. And you're likely wondering, oh my gosh, Rog, what are these? So I'm going to go through them a little by little so we can get an idea of what we're looking at together. Don't get stuck on this part because I'm going to be talking a lot more about them individually as we move along. These colors, these lines that you're seeing are generated from automated tools, indicators that I use. They take things that I used to do manually once upon a time, and it happens automatically for me. The colors mean something. The lines are there that I once used to do manually, and now they're automated. So collectively, I refer to these automated tools as tops. And let's get this out of the way for total peace of mind. You ready? These are free and simple to download. These are all free tools. You can take a breath and go, oh my gosh, Rog, I got to learn and buy it. Nope. No indicators. No one has to buy. They're free, simple to download, no big tech, no advanced charting skills needed. They do all the charting work for you to help you identify those key levels, such as what price to buy and when. All right. So imagine these indicators being things that I've been doing manually for 30 years. And now you get my brain mapped out on that chart. All right, so this is probably one of my favorite trades. This is the SPY. It's probably one of my favorite trades of the year. I alluded to this earlier. We bought SPY at $490.50 because we knew as this thing was heading lower, it formed a pattern that I have seen many, many, many times. And that was a certain percentage of sell-off from the highs that when we get this, which doesn't happen that often, we get this percentage sell-off, it's almost always with a 1 year forward look up from the lows, right? It's all about patterns. That's what these strategies are here. But this is probably one of my favorite trades of the year. But we have a whole lot else to share other than that move in the SPY. So this is, again, one of these trade alert examples that not only our members took advantage of, but I did as well. And this is our XLK trade. So we're going a little further back in the history of what we've been doing with these long-term account growth trades. We bought XLK in September of 2022 for $122. That's not that long ago, right? It's not even 3 years ago. So $122, where this is sitting right now is almost, well, actually over double, right? Over double. Now, for those of you that aren't familiar with the XLK ETF, it's the technology sector. And it's made up of companies that maybe you've heard of: Apple, Microsoft, NVIDIA, Broadcom, Salesforce, Cisco, a lot of familiar names, right? And that's all in this ETF called the XLK. There are times when the ETF, which is a basket of various companies, it makes more sense to buy than individual stocks. Think mutual funds, only cheaper, lower holding cost, and far better liquidity. We bought shares at 122.55, 122.55, and at 1 20.55. All right. And that was back in 2022. Today, last time I checked, they're at $260. And here's the cool part, paying dividends. See this little D down in here? That's a dividend and a dividend. So we bought this way back in here. Look at all the dividends we've had as the stock of this ETF appreciated, meaning even more growth while you let the trade itself appreciate, do that work for you. So that's XLK. So we want the underlying trade to work. It's not just about the dividends and it's not just about the trade with this long term. We can kind of double our fun. All right, so let's talk about another example. This is McDonald's. And I don't know if it's kind of, it might be a little small, but if you're looking at this chart saying, Rog, what am I looking at here? You'll see the name of what we're trading as, that technology, and you'll see it's also a weekly chart. So if you're squinting to see that, they'll tell you what the name of the symbol is, and it will show you this is a weekly chart we're looking at. So here, as you can see here on the upper left corner, it's a 1 week chart of McDonald's. Okay, for those of you looking at the chart there. So what I've shared with you here on this chart was the exact alert I sent to members. I told them on June 4th, basically a year ago, at 3:19 p.m., we're going to buy McDonald's when it gets to 253.30. So after a $253.50 entry on McDonald's, buying a dip, right? The stock went on sale, giving us position to let that move in our favor. Also move against us when volatility hits. That price entry is so important, gang, because it acts as a shock absorber for noise we don't want, and it acts as a really good price of something on sale for the movement that we do. So it keeps us from getting stopped out every time there's a hiccup in the stock. By the way, McDonald's sold off after rocketing up higher through 300. It sold off on tainted meat supply issues. You might remember that. But it never threatened the entry price because we bought that dip. And it has the profit of over 50 points per share and a new high, which when I look at a chart like this, it may be erratic, but it indicates that traders and investors still have an appetite for McDonald's and Big Macs and chicken nuggets and whatever else, a McRib, right? But this is what we did. Now, let me give you one other thing about this alert. This is a setup alert, meaning I'm not telling you after I bought McDonald's. I'm letting everybody know who gets this alert. McDonald's isn't at 253.30 yet, but when it does, everyone knows, hey, I can prepare for this. I can figure out how many shares I want to buy. I can figure out maybe what account to buy it in. And then once price gets down there, then I'll buy it. So this is not an after the fact heads up. This is, hey, this is truly a heads up. It's a setup alert. So we know it all, and then we wait for McDonald's to come to us. All right. Next up is Apple. So Apple, again, this is a weekly price chart. And let's talk about a few things on this chart. I mentioned this is showing several months of, well, I should mention it's showing several months of support. And every one of these yellow and purple lines, and by the way, the color doesn't mean anything. It just allows me to pair up. Okay, this yellow and yellow belong together. This purple and purple belong together. Just helps you, match them up like a pair of socks, right? That's all the colors really are. And you'll see over time, there's been a lot of steady support through this area, right? These are automated. Like I said, once upon a time, I used to do this stuff manually, and now these are automated. So I've got this several month long level of support. And this is really a variation of a tool called Darvis. This is a 60-plus-year-old time-tested process of identifying automatically support and resistance with a price pattern, which is markedly different than a chart pattern. Price has to do certain things to show us an inflection low and an inflection high. So the weekly chart was testing that key support of those Darvis levels kind of through here, and it tested this moving average. Now those white dots that you see right there, that's a powerful measure of whether a stock is still on the bullish side of sentiment or on the bearish side. So being above it suggests that the stock could keep going. These white dots are called propulsion dots, right? And again, what they're doing is they're taking moving averages and behavior that I used to do manually once upon a time. So I had all this spaghetti on my chart, and it cleans it up to this beautiful set of white dots. When they're on, that is a very powerful support level. And you can see that when price is above them, it tends to continue to drift. Visiting those dots and visiting this zone that was automated and found by the Darvis tool, that is a sign the stock is on sale, that the stock is as support, and in this case at 124.05, right? Now, Apple's had a roller coaster of a time, but it's still well above where we bought it. And that's where Apple sits right now. So again, waiting for those sales and recognizing the patterns that we often see before the sale happens, we can recognize, oh, that's the level. We don't have to wait for a price level and then do the analysis. The analysis is showing us what that price level is. And there's a whole lot more confidence in letting a market come to you rather than kind of panicking and saying, is this an opportunity? I'm not sure. What does this low mean? Could it keep going lower? All those things, again, are taken aside because I can use the patterns that have worked for me for 35 years. All right, so here's another one. So again, these are all examples that our members took advantage of. These are the kind of alerts that I set up for myself for my long-term account. And this one's Coke. Look, if Grandpa Buffett, that's what I call Warren Buffett, loves Coke, heck, so do I. All right. So once again, let's take a look at some of these things. Here's multiple levels of support. Actually, even some support more recently in here. And again, these are all automated. Now, if I'm looking at support, support is what? I mean, think about what it is. It's buying. It's a floor, right? So when there's multiple support, that price is going to be a really powerful level to use because there's more probability that it will hold than not. Support is simply where there is a high expectation of buyers, right? It's a floor. It can be called demand, right? That's where the order flow favors more appreciation in price, not sinking lower. So in the end, think about it. You and I, we're simply trying to find levels of reaction, right, that we can engage in. In this case, that reaction should be when we get down to that price level, traders should be thinking, this is on sale like a blue light special at Kmart, and buy the thing. In the case of Coke, it was primarily, most recently, a reversion to the mean. Now, on my charts, I automate the mean as well. There's no such thing as the mean. Everyone can determine what a mean is for yourself, but I use a 34 period moving average. So if you want to know what my mean is, it's a 34 period exponential moving average. You can see this with the green, the blue, and the red lines on this chart. That is the mean for me. And so what is a mean? Okay, Rog, technobabble alert. What is a reversion to the mean? For me, again, that's the mean. There's no one mean, right? Every trader has their version of what a mean is. So a mean is all it is, the historical average that a stock will tend from time to time to revisit, right? So having a solid dividend yielding company like Coke bought on sale is always going to be a great decision for any portfolio. Don't listen to me, listen to Grandpa Buffett when it comes to Coke. So when stocks like Coke pull back to a historical level of support, that reversion to the mean, that is the time to act. That's the entry for a great sale price. All right. So not only were we able to scoop this up for $61.50, there is a 2.8%, I think it's actually a 2% annual. If you think about what the dividends are for Coke, I think it's annual 2% for just holding the stock. And as it moves higher, we're getting paid via dividends. And if we can buy these dips, we also see the account growth because of the appreciation of price. Imagine if I bought it at a high and it went sideways. Okay, I might still be getting dividends, but I'm not getting the underlying shares growing. And that's what happens to a lot of traders. They buy it after a run up. They think they've got a great stock and they're going to say, hey, but I'm getting a dividend. But then I'm saying, but if you bought it at 70 and it's only at 72, is that really such a great underlying long-term growth trade? Or are you better off buying it at $61.50, letting it go to 70, 72 and higher, right? And that's the important part. So taking a look at Coke, I love that. I mean, please keep an eye on Coke, one of my favorite symbols. Next up, actually another favorite, Walmart. And again, these are all setups that we've alerted to members. A steady stock in the staples sector. So I love staples. They're that sector that's considered defensive. So when sometimes the world is kind of in meltdown mode, we go, are people going to stop shopping at Walmart? Probably not, right? So WMT not only has dividend yield appeal, but it had an uptrend pulling back to support. And when we have a trend, when we can get that pullback to support, there's a higher probability of continuation. A lot of traders think that every time something pulls back, it's going to crash. It's usually going to continue if there's a healthy trend. So Walmart's been one of the steadier names, in some ways even steadier than the S&P, making it a perfect stock to hold in a long-term account with the dividends and that added defensive quality where it can go higher in good times, it can go higher in bad times, right? Who's going to stop going to Walmart? So having these dividend yield staples is really a smart defensive holding for any trader, long-term trader. And I'm always on the lookout for entries in things like Walmart. We talked about quality names earlier. Walmart, Coke, Altria is another one. So in this case, again, Walmart pulled back to support. And again, a mean reversion identified by the automation of those three lines, the green, the blue, and the red. And a strong trend that precedes a pullback means a high probability that it's going to continue after that pullback because everyone sees that it's strong, it goes on sale, people scoop it up, and then it continues right on the direction it was. We're not talking about a downtrend reversal, which is what a lot of traders get in trouble with. I'm talking something that was moving higher, took a break, and is continuing to move higher. Bless you. So that's what we're looking at. And so while the investing public, sadly, is going to hear bad news on Walmart and everything else, they panic thinking that every pullback is a precursor to a trend reversal, to tanking, to a crash, because all we ever see every time a stock pulls back is all the negative. Did all the positive that preceded suddenly evaporate with a company like Walmart? Of course not. That's why smart traders know to buy this kind of dip. All right. Pretty darn cool be able to take advantage of something like Walmart. So what we discussed? Well, I'm talking about mean reversions and automating that. I'm talking about support levels on a weekly time frame and automating that. I'm talking about understanding what kind of stocks, yes, might have dividend yield, but that's not it. Which ones have the probability of continuing higher after going on sale? So it's not just let's just buy Walmart and sit on it. It's really about, hey, can I buy things that have the probability of continuing in that direction? All right. And again, if you have any questions, type them on in. I'm happy to go over them with you. I think this is the last trade example. Yeah. All right. So what we've been talking about all evening is a mindset shift with a bunch of examples, right? Whether they be ones from that I've done way back when, 2017. I've got trades, gosh, we could sit here for an hour and I could tell you about trades I put on in 1999. I could tell you that my mom has a double digit because I was investing for my mom back then. She's a double digit dollar cost for Amazon, all right? Single digit for IBM. And these are things that I was doing in my teens. I won't even talk about how I use the same process for Bitcoin. That'll be another time. Let's just say it's a three-figure entry. So you're not just an investor, right? There's a mindset shift that's going to change everything. So you're not just an investor. You're starting to own the role of a long-term trader. You do have a strategy. You are making decisions. You are managing risk just at a different pace, right? Long-term trading is super powerful because it's frankly simple. I showed you really two tools and two techniques that got me into every one of those trades. It's repeatable. And frankly, hopefully at this point, you can see it's proven. And I love this. It's strategic patience. It's the one thing most traders don't have anymore. In a world of microwave brownie mindsets of quick, 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 in and out, it's strategic patience, right? You don't have to be glued to a screen to grow your money. In fact, that's counterproductive. You're building a long-term strategy. You're learning a long-term strategy. You're learning what type of stocks to buy for a long-term strategy. And long-term trading is a disciplined strategy where your edge is time. And gosh, I can't emphasize that enough. It's time. It's also clarity, what type of stocks to buy, and keeping with the consistency of the strategy rather than jumping to a new strategy all the time and again being sadly counterproductive. And while this might be an old saying, this is true, it's an old saying, it's a beautiful one. Give a man, give anyone a fish, and you feed them for that day, or a fish stick. Teach a man to fish, and you feed him for a lifetime. And that's what we're here to do. I had people who were put in my path that taught me how to do this, and it served me for a lifetime. And that's what I'm passing on here to you. I am rooting for you. We know not everyone wants to be a trader. And as in someone who's buying and selling stocks and gets in and gets out of those positions on a daily or even weekly basis. There's nothing wrong with that, right? We just know that everyone wants to do that. But we do know, and frankly, everyone needs to be, and I think a lot of people want to be the type of trader, investor who's a money grower, right? Who's a wealth builder. Who here doesn't respect Warren Buffett? We look at what he's done. This is what we're looking to do for ourselves starting today if necessary, right? The type of trader who wants to know where to put their money to work over their lifetime while they continue their day job, right? Not glued in front of the screens. You work hard to save your money, so here's your opportunity to get your money to work hard and smart for you. This is where you learn how to fish. This is where you learn to put your money in places where it grows while you sleep, which I still love that idea. And that is why what we're doing is introducing the Sector Secrets long-term growth room. So this is my hands-off approach, my hands-off formula, and it is a formula for building that longer-term wealth and frankly, peace of mind. At this stage, gang, everybody has to be at the helm of their own long-term, call it investing, call it trading portfolio. So with all this in mind, again, it's an active room where I'm going to be with you all. So what I mean by active, I'll be actively working with you all. And it's designed specifically for long-term traders. Those are already traders. I want to add this time frame equally to what they're doing. And maybe you're a day trader, swing trader. Yeah, Rog, I need to do this stuff that I can take advantage of years. I want to buy something for 122 bucks and see it go to 250 over time. So that's one type. What if you're not even an active trader? Even more so for those of you that don't consider yourself traders or active traders, maybe you like the investor term, and that's okay. You are a long-term trader despite your day job, and this equally, as and maybe even more so, is for you, right? Whatever you're doing now, this is something that can supplement what you're doing. So in this room, we're going to be talking about setups, like I was sharing with you here, trades and symbols that I plan to hold for months and likely years, and things that I'm looking at that will outperform the S&P if we just bought it, right? I'm dedicated to looking for longer term trades where our money can sit and grow. Remember strategic patience? We utilize charts, as I was showing you here, to identify timing. I'm not going through fundamentals and PE. Nope, nothing complicated like that. Charts reflect all those things we know and don't know about the stock. I trust them completely. So we utilize charts for timing and price for all these various symbols. This is as close to, I know it's kind of almost hackneyed to say, but it's as close to set it and leave it alone, set it and forget it, as investing or long-term trading can get. We're going to be navigating these waters together. I'm going to be showing you what I'm doing, how I'm doing it, and why I'm doing it in this dedicated long-term growth room. It's so important, gang. This isn't something that I take lightly at all. It's one of those things that everyone needs to learn and then go teach people they love, right? Mark your calendar for the first Tuesday of every month. From 3 to 4 p.m., we get together and we do sessions where we manage our trades. So every first Tuesday of the month, we manage our trades, scan the market for new opportunities, add to our watch list, identify symbols we want to buy and at what price. Because remember what I said earlier? I'm not telling you after I've done something. I'm sharing with you the setup of when we want to buy a certain stock once that price is reached. You are at the helm of the decision. I'm just telling you the best price and the best symbols that I feel are right for it. We spend our time going over the strategies and the principles needed to manage risk. This is so huge, gang. Underperforming portfolios don't think like traders. They don't want to buy it and hold it forever. Even if they buy it at 100 and it goes to 2, they'll keep holding it. think about how all that capital is not getting the most bang for your buck. So we talk about managing risk. I have actually a formula and a spreadsheet where you're going to no longer be confused as to, Rog, how many shares do I buy of this thing? What if it goes against me? How do I make sure this isn't this mess in my portfolio? We talk about position sizing. We talk about how we take profit and growing your money over the long run. Remember, 6 months, 7 months, 10 months, 2 years, whatever it may be, it's that long term mindset, that discussion, that shift that we did earlier in this presentation. All the sessions are recorded and available for you to watch at your leisure. You're never going to miss a thing because you can follow along on your schedule. So if the first Tuesday comes and goes and you can't join us live, no problem. A lot of our members like watching replays because they can pause and rewind and do all that. But the cool thing is you get trade alerts. So let's say you're not watching the replay until maybe a day later or hours later. The moment I see a setup that I want us all to be aware of, I send out a trade alert and it goes via the room, that long-term room. It goes to the Simpler Trading mobile app that you can use your phone for. And once that symbol's on my radar, I post it in the alert section. It populates in the mobile app. You know exactly what I want to buy and when I want to buy it. So these trade alerts are set up in a way to allow you the time to look at the symbol and start setting up the trade, not after the fact. I can't emphasize that enough. No one should be doing anything blindly following. Does anyone think that's going to help grow you the peace of mind and wealth you're looking for? Of course not. You're an active participant. But now, rather than going, well, I'm not sure why I'm buying this or how many shares, you know exactly what you're doing, right? The alerts are not intended to be followed blindly, right? But rather it gives you a lot of time to do your homework, do your position sizing in the most appropriate way for your account. All right, so what else does this long-term growth room come with? My top tier outlook. This is my big picture premium report. I look at seasonal trends, macroeconomic trends. I'm very, very, very close to the pulse of the Federal Reserve monetary policy. By the way, we've been bullish for the better part of, gosh, 2 years now, which is exactly what the markets have been generally doing. We were even bullish during the April pullback. Why? Because when you understand macro and you understand those monetary policy cycles, that is why money tends to go. Is money cheap? Are they printing it? Right? So that is where that top tier outlook is going to be a great way to understand that weekly. Every Monday, you know what's coming up. You know what kind of macro I'm looking for, what kind of macro catalysts, what my symbols are, what sectors are moving. We recently did a issue on social sentiment names because they have been on fire. So that top tier outlook is going to give you a really good compass for the week. We have a learning center, and this is your library of helpful videos and information that's broken down piece by topic. Can I afford this trade? There's a video for that. How much should I risk? How many shares should I buy? There's a video for that. And then we have the trading archive, which is cool. All those monthly live sessions are there. So if you miss something, if you want to review something, it's a great resource. So you can go back and say, you know, I know a month ago, Raghee talked about, you know, a macro cycle or the Federal Reserve or the staples sector. I want to review that and go back and do that. So it's really there for you to continue to benefit from. All right. So what we're going to do to kick everything off, right? With this service, we want everyone to have the knowledge. That's exactly what we've been doing here this entire time. What are the things you need to know? We talked about mind shift. We talked about a couple indicators. We talked about some setups. I share with you examples. Again, the whole thing really is with this service, and this is what's so important, you get a strategy class. So no one's going to be lost about, well, Rog, you can do this. How do I do what you've been doing for 35 years? This class is your cheat sheet. It's an immersion. It's everything you need, encyclopedia, right? What it takes to create these long-term growth trades. Remember that list of trades where I said, oh, can you imagine if we knew to find stocks like this 30 years ago that have had 5 and 6 figure percent, 50,000. I think Monster was up 400,000%, right? We think, if I only knew. This is day one. We got to start somewhere. By recognizing these patterns, by recognizing what to look for, by capitalizing on sales, we start this together, right? That's what you're going to learn to do. So maybe 30 years from now when that next list comes out, right? So in those 4 hours, we're going to talk about all things long-term growth. So you're not going to be one of those people saying, I didn't know that was the stock that was going to do that. You're going to learn how to scan the market looking for those types of setups. And before I get into probably what you're wanting to know at this point, all right, Ron, this all sounds really cool. Okay, what is this going to cost? Well, the basic package is what you get full access to the long-term growth room plus the class for 3 months, for 90 days. You get to hang out with me for a quarter. You're going to get the class that's going to teach you how to use those indicators, how to scan for those types of symbols. I'm going to get into a lot of detail in that class. Everything from cycles to setup selection to watch list building, lots and lots of things. Shares, leaps, time horizons. It's going to be jam packed full of the things that I've learned for 35 plus years. So with the pro package, you're going to get full access to everything we've talked about, the class, but you get the room for a whole year. All right. And that's going to be $897. Now, if you sign up for the pro package by July 21, and I got this note here to mention this. If you sign up by July 21, so this is the 9th, all right, that we're talking right now, you can lock this in where if you want to hang out with me year after year, ongoing, you can lock in a charter rate of 497 because it's not where this room is going to stay. Not with the kind of trades and the type of profits we're making, but we're just launching it and you'll get it at 497 for the life of your membership after the 897 pro sign up. Okay? This particular introductory offer, again, is only going to be good to the 21st. I emphasize that because if you take the class at 897 and you go, Rog, yeah, I want to renew for 497 forever, which would be great. You got to do it by the 21st, gang. All right. If you don't buy the pro package, again, you're going to miss out on locking in at that charter rate. We do have an elite package, and this is a little different, and it's actually really cool. And I'm glad we have it because this is for those of you that want to trade all time frames. Okay, Rog, I want to day trade with you. I want to swing trade with you. I want to long-term trade with you as well. I want to have all those different slices of my trading life, both long-term growth and then near-term income. The mastery is where we get together 5 days a week and you get all those long-term growth benefits, right? Plus 5 days a week with me, day trading, swing trading, tech sessions. So tech is never the bottleneck in the Sector Secrets Mastery. We make sure your charts are ready to go. If you have questions about putting orders on your platform, we have sessions once a week so everyone's fluent in probably one of the most common bottlenecks in trading, the tech stuff, right? For $997, you'll have 90 days of access to enjoy what we call the Sector Fu Mojo Dojo trading room. So day trading, swing trading, and longer term growth. And again, everything here, monthly trader calls, simpler showcase, the learning center, the newsletter. You get my alerts for swing trading. And of course, you get my alerts for the long-term account growth. All right, this is what the schedule looks like for those of you that are wondering, okay, Rog, what does this schedule look like? How much of my time is it going to take? This is the schedule for the live room. And what we've done, if you join for those 90 days, the first 2 hours of the day. So the elite package gives you 90 days plus the strategy class where I'm going to sit down with 4 hours and we're going to mind meld, Vulcan style. And I'm going to give you everything that I have tested over the past 3.5 decades that works for me and continues to work for me. And if you say, Rob, I may not want to day trade with you in the morning, but I really want to swing trade with you. Great. Join us from 10:30 to 11:30. Rog, I really want to day trade with you and swing trade. So you can see every single day, first 2 hours, jump in wherever you'd like. And then the first Tuesday of every month, you can see here, that's where we do the longer term account growth room. And there are other sessions in here with the tech session, some scalping sessions for those of you that really want that well-rounded approach to trading. We have, again, the Q&A of Ask Me Anything. We want to make sure that we bookend every week in that mastery room because it is a mastery room. We bookend every week. So any tech issues we can solve on Monday and any questions at the end of the week we can cover on Friday. And we do it like this every single week. It's super consistent. All right, moving on then to the class itself. It's going to be 11 to 3 p.m. Eastern. So 11 a.m., not p.m. My gosh, I'd be asleep. 11 a.m. to 3 p.m. On the 19th. So that's coming up in just 10 days. All right. So we're going to be covering everything from how to buy shares, how to buy leaps, understanding macro, watch list building, the charting, what kind of patterns I look for. I've actually dusted off some of my older notes from way back when to look at things that I don't even consciously do. Now it's kind of subconscious. I learned these things, different types of cycles and rhythms that inherent. I mean, there's going to be all sorts of things where I'm just going to brain dump all that information on you. So in 4 hours, you're going to get an immersion. That's the bottom line. So in our time together on the 19th, you're going to learn how to read the charts. I'm going to cover those indicators that you saw in those charts, how to set them up. Again, those indicators are free. They're going to come with that class. We'll show you how to put them on your chart. I'm going to be using TradingView, by the way. So a lot of you might say, great, Rog. I think TradingView is perfect for longer term account growth. And it works with any brokerage that you might have. So it's broker agnostic. No issues with, oh, I don't get this broker in my country. None of that nonsense. It works for everybody. So we're going to dive into identifying symbols that we're going to be looking at, what price they should be bought at. You're going to learn how to build that watch list, which is a superpower using indices and sectors, and even sometimes we like the individual stock. You'll know when to choose which. We're going to continue addressing how much of your account should be used. So risk is at the front of the line, understanding how never to blow up an account. I've never done it. I don't want you to do it either. How to minimize losses and how you will get that long-term account growth when you put it all together. So it's absolutely going to be a total mind meld, wealth of information. It's going to answer, frankly, all of your questions. That is what it's designed to do. Give you the confidence to make decisions like I do. If you want more information, there's the contact information. By the way, the link to sign up is simplertrading.com/grow strat. If you have any extra questions, feel free to email or call, and that's probably the best way to get those questions answered. And for anybody who does want interest-free payments, you got PayPal credit. So that's a nice thing that you can take advantage of. And this is what our members say. This is what our clients say. In my short time with you, your system has been the most successful for me. You might say, Rod, great. It works for you. But what about the people who are putting it to work? And you can see here, this is what folks are saying. I've been trading for 5 years, but I'm new here and I'm exhausted from the massive outstanding content. Look, if you want to have, it's not a kitchen sink, gang. I'm not dumping every little tidbit of useless and sometimes fascinating information. We're talking about practical, actionable things, right? So you're going to learn the things that I have distilled over the years without the fluff, right? It's a fluff-free zone. All right. Best advice ever, became profitable. I love comments like that, right? Became profitable this year listening to you. You know, one of my two of my favorite comments are, Rog, I became profitable this year. I can't tell you how happy that makes me. And my favorite question is this, Rob, who takes care of your trading taxes? I've got profits this year and I need a way to, I love those questions. We get those questions quite a bit. I just had my best month ever. Thank you. All right. So love it. So that's the end, or frankly, what I hope it is just the beginning of your time getting to a point in your trading where you can rely upon your knowledge. You're not going to panic when everyone else is, look, the S&P was melting down in April. We bought it at 490.58. Why? Because we had the confidence about these patterns that I'm going to teach you. Use the tools, it automates it, and this is where you're just not going to be susceptible to all the hype and fear that's out there. And it seems to be getting worse, right? It doesn't help us grow an account. It's actually maddening and it's kind of sad. But if we can, again, put time-tested knowledge to work, and I'll even say, when you do this, go teach your kids, go teach your grandkids, go teach your best friend. And this is how we start to let people learn to take control of their own money, because that's really what it's all about. So hopefully it's just the beginning. All right, there are some questions that we're going to take a look at. So thank you for hanging out with me for the last hour. And one of the questions is, and the Trish boss wanted to let you all know, who's out there, my Sector Secrets, Mastery, Mojo, Dojo, awesome folks. Let me mention this. Thank you for being here. I know a lot of you are saying, Rog, I love all the trade examples. I'm in them right there with you, which makes me so happy. Nothing is changing for you all. The way that we've been doing the long term, nothing is changing. The only thing I will say to my members out there, our Sector Secrets Mastery members, you know I love you. The class. If you want to take the class, the link will direct them to their particular price, right, Trish? I'm sorry. When they click on that link and they're logged into the simple. So when you're logged,
It knows.
it knows.
It knows.
Trish Boss said it knows, and I know better than they argue with the Trish Boss. So if you're logged into the simplertrading.com website, it knows you. It knows you're the Sector Secrets Mastery VIP, and it will automatically give you that class option at your lower, you're already a member price. Okay. So that's the big I love you from the Trish Boss. So my mastery folks, nothing is changing for you all. This is for folks who are not in the mastery, or maybe you take the elite and you want to join what we're doing in the mastery. Those 90 days will be, and I don't mean this lightly, those will absolutely eradicate a lot of the myths that you think about trading and longer term trading. Those 90 days, if you ask any of the members, if y'all are looking at the Zoom chat, my members out there, let people know what you think, as far as being in the room. And they'll tell you. I don't have to tell you. They'll tell you, right? It's a community of like-minded traders. We don't panic. We don't look at the news. We don't talk about blasted politics. We're not chasing some meme stock to the moon. We're doing prudent, community-based, patience and discipline-oriented trades together. It's a great group. I spend every single morning with these people, and I couldn't be more honored to do so. And you're going to love this group. All right. The Trish bosses also mentioned, someone asked, do I trade futures? All right. So if you do the elite, yeah. So one of the things that you'll learn to do, this is for the elite though. Futures aren't super appropriate for what I would say is longer term account growth. It's very leveraged. It's very volatile. Yes, you could do leaps in some of the ETFs that are associated with certain commodities like oil, bonds. We're in a bond trade right now. We're in a long-term TLT trade right now. So you can do that via ETFs, but I do trade futures. If you're looking to intraday or swing trade futures, there's a couple ways you can do it. Number one, it would be the elite. So you can join me in the Sector Secrets Mastery. You'll learn how I day trade futures along with the options of the ETFs that move with the futures. And yeah, you're going to see how we put it all together. We start every morning with a scan of S&P, NASDAQ, Russell, Dow, Bitcoin, crude oil, gold, and bonds. Every morning I start with that magic eight, the awesome eight, and then we go on to what else might be moving. So that would be ideal if you want to learn how to trade futures or the ETFs that move with the futures. You would do that, and that the elite would be the best way to do it. All right, what about IPOs? It's so funny. I don't know who asked about that, but thank you. I'm not a big fan of looking at IPOs. Let me do this here. I'm not, I don't have I have my trading view charts up right now. Okay. So I'm not a big fan of IPOs. I got to be straight up with y'all about that. I'm just not. And one of the reasons I'm not, and when you get into the class, I'm going to share with you the full portfolio that we have right now. And if you look at the positions, symbol by symbol, you'll see most of their returns individually are exceeding the typical 10% the S&P does. Now, when I look at an IPO, there's a lot of potential there, right? There's a lot of potential. So what I like to do, I think Circle is probably one a lot of folks are wondering about, things like that. I'm not a big fan of that's speculating. Am I saying that based on what I know about Circle right now, that it's going to be a big winner 2, 3 years from now? Let me give you this advice, and we'll get into all this in the room for sure. First of all, if you like IPOs, take a look at the holdings in the IPO. This is the Renaissance IPO ETF. There's some more mature initial public offerings there. The thing with IPOs is, remember, there's a blackout date and there's an insider date. And oftentimes, after an initial huge burst, After the insider starts selling, we might get another setup. And at that point, the stock's a little bit mature. The born on date on this thing is very, very new. So I'm not going to say I'm going to blindly grab IPOs, but if you take a look at slightly more mature IPOs, say in that IPO ETF, that's usually how I go about doing that. So thank you for the question. It's not a no, gang, but IPOs are highly speculative. Now, it doesn't mean that you can't get into an IPO after the insider date and the blackout date. Just wait for a few key dates. And if it's the real thing, there'll be opportunities. I mean, look at Amazon, right? Let's talk about the IPO of IPOs. Who knew to buy that then? There were revisits where that stock struggled again. But if you understand the patterns and the cycles of what I'm teaching you, after that initial burst higher, where, there's some poor soul that owns Circle from 280, and there's someone else who owns it from 80, right? What's the difference? And that has a lot to do with pattern and patience and time. So the IPO ETF is a great place to look. Is this a reasonable ratio? If a $100,000 account limits positions to 5,000 each? Well, one of the things that we'll get into in the class is I have a spreadsheet. We call this Sector Secrets Mastery Position Sizing Guide. The Mastery members are very well versed with it. And what that thing does, it allows you to put in your account value, a desired account risk. So some traders only want to risk 2% per account. Other traders are willing to risk 5% in their account. And what that does is starting with risk, it creates a budget. And that budget allows a trader, long-term trader, to know how many dollars worth of shares or leaps, by the way, because that's part of this conversation too. I didn't get into it here, but if you're curious, yes, it includes a discussion about leaps when we get into the class. But it lets you know how many dollars worth of shares or longer term dated options you can buy. And it's completely formulaic. So, that 5,000 thing may not be necessarily appropriate. And Trish, you're saying look in the Q&A section?
Yeah.
Okay, hang on.
I'm gonna text you.
Oh, okay. Oh, she's texting me some of these. Okay. So I wouldn't say go with 5,000. No, I wouldn't say that. That's fine. But really what I'd rather everyone do is go through that formulaic process of, okay, what's my desired account risk? What's my stop on the stock? What's my stop on the leap? Right? And then when you put all that information in the spreadsheet guide, it's going to automatically spit out a budget. And when you've got that budget, now you know, all right, this is how many dollars this position is allowed to spend. I won't max that budget out all the time, but at least gives me an upper limit of how many dollars I'm allowed to spend without disproportionately putting risk on that longer term account. And that includes stop losses, gang, which you're going to learn in the class. All right. What time frames do I use? Well, for longer term account growth, as we talked about during that discussion, weekly time frames. Because if it's any shorter than a weekly, I'm going to start to get twitchy, right? We twitchy little traders, right? Don't want to do that. So a weekly is what I use for the long-term account growth. That's what I've been using for 30 plus years. Monthly is too long, doesn't give me enough opportunities, right? Because sometimes it's okay to have an opportunity that maybe only goes for a year or a year and a half. And other times I'll have positions that I've had open for 25 years, right? The weekly is really effective at that. The daily is too short, and I find the monthly way too long. So the weekly is what I've decided is most effective for what I'm going to teach you all. Let's see. Yeah, and again, I just want to mention one more time, all right? If you are a member of the Sector Secrets Mastery, nothing is changing for you, right? You're still going to get the long-term account growth room. The only thing, if you'd like to participate in the class, there's a special price for you for the class. When you log into the simpletrading.com website, it'll know you're a Mastery member and it'll show you that basic price level. What is it for the, well, anyways, when you log in, it'll show you the price that you all get. Okay. Yeah. So it's half. It's half off. More. Yeah. Just more than half off. All right. So we're giving my Mastery members an amazing deal. So again, nothing is changing for you. You're still going to get the first Tuesday. Now what we're doing is we're opening up the room, the great trades that we've had over the past nearly 3 years now. Now we're opening up that part of the mastery to people to participate in. Okay, so you can check out the class if that's something you want to do. Um, so I think we got the questions.
There's a
Any,
couple more in the Q&A section.
all right, let me open up this Q&A section.
You should look clear.
I see the webinar chat. Hang on. Could you just read it to me? I don't see my
Do you
Q&A.
do you ever consider fundamentals?
Do I ever consider fundamentals? Ooh, that's a good one, Trish Boss.
I
So
didn't ask the question.
yeah, so thank you for that question. All right, so I have buddies who have stacks and stacks and stacks of paper on the floor and on the desk, and they're pouring through numbers. And look, some people are really good at that. I don't really enjoy the process of pouring over those kinds of things. And there are a few metrics that I will mention in the class. And frankly, these are metrics that are easy to look up. It's just a number. You look at the trend of the number, and I'll show you all that. It's really only two numbers that I look at. It's mostly related to revenue. But here's what I will say. Price charts are a level playing field. So look at it this way. What I do know about a company is in the price chart. What I don't know, which is going to far outpace what I do know about a stock. No one can know everything about a stock, right? Even what I don't know is going to be in price. So if something's heading lower, and I can't see a fundamental reason for it. I can't find the news reason for it. Somewhere, somebody knows things. And you all know as well as I, we're retail traders. There are people that are privy to things long before we are. But what do I care? You and I are surfers on the ocean, right? The ocean's going to go to shore, and it's our job to catch a wave. The ocean doesn't care that we're there. I don't even know why the ocean's moving the way it's moving. All I know to do is catch a ride. For us, catching a ride as a long-term trader is recognizing the patterns that typically precede that continuous growth, or recognizing the patterns that precede the continuation. So that way, I'm never fooling myself into thinking I need to follow every fundamental. Sometimes the market completely ignores it, right? Sometimes, I have a lot of traders who thought, Rog, is now the time to buy UNH. That was 100 points ago. I said, no, don't do it. The pattern isn't there. Then recently, someone else asked me, I think just yesterday, is it time to buy UNH? And I said, don't do it. And what did we find out today? Not that I knew this story was coming. Now there's a DOJ investigation and it's still struggling. But the price patterns, the patterns that I look for, weren't even showing that the buy is ready for prime time yet. And I trust that. So the fundamentals, there's a couple things that I look at. I mean, I think literally two. And the rest of it is looking at price, patterns, and even a little bit of volume that I'll show you. Because the powers that be can hide their intention and hide the news, but they can't hide their size, gang. And if you say, oh, dark pools, gang, volume is still absolutely like footprints in damp sand. And I'll show you how to find those footprints. All right, let's see. Another question?
How many stocks do you have in the portfolio?
How many stocks do I have in the portfolio? I take the Grandpa Buffett, the Warren Buffett approach. So I have a main portfolio for retirement. I have a couple different portfolios that have different time to when I want to touch that money, right? I don't believe the only thing where I disagree with Warren Buffett is forever. How long are you going to hold the position? Forever. No, you and I want to touch the money eventually. Now, granted, if you're managing money maybe for the grandkids or a niece or nephew or something that's going to outlive you, sure, that's fine. But most of us need to touch our money eventually. So forever is not a good answer. It may be for Berkshire Hathaway, but it's not going to be for you and me, not necessarily all of our portfolios. Where I do agree with Warren Buffett is a concentrated group. At any given time, Berkshire Hathaway has 35 to 50 positions. That's it. Over diversification just means you have small positions in lots of names. And I'm not a big fan of that. If I want a small position in lots of names, I'll buy the SPY, right? And we have SPY in the portfolio. If I want exposure to a small or mid cap, again, I can buy an index that gives me that exposure within the ETF. But I'm a big believer in a very deliberate and smaller list of positions in the portfolio. And I typically don't like more than 35 to 50. I might spread that through different portfolios. I'll teach you how and why I do that. but I'm not a big believer in 200 positions of tiny, tiny fractional, unimpactful size. If I can buy a lot of shares of a dividend yielding stock like Coke, Altria is in our position. You better believe I will. I don't want just a handful of shares. I want as many as the budget will allow me to do. So not a lot, not a lot. We really want to be very conscientious about over diversifying into, frankly, lesser stocks. I mean, are there that many great opportunities? Warren Buffett doesn't seem to think so, and he's the greatest to ever do it. So I definitely take that philosophy. Doesn't mean that we don't have a lot of selection, but we are very choosy. All right, what else?
Someone asked to look at Pepsi.
Can you look at Pepsi? Sure. All right. So I'm going to go to the layout that I'm going to share with you all in the class. It's the TOPS layout. I'm going to go to a weekly chart of Pepsi. All right, so let's take a look at Pepsi right now. I love the question. Now you're going to learn how to do all this, but I'm going to give you a little teaser into some of what you're going to learn in the class. All right, whether you're going shares or leaps, the same thing is going to apply, and you're going to learn how to do both. Pepsi is at the moment an underperformer. How do I know that? Well, the weekly chart of the SPY is generally pretty bullish or neutral, while Pepsi, see all this red? Bearish momentum and bearish trend on the weekly time frame. It's also below the white dots that I mentioned earlier in the presentation. Remember, I mentioned there was a line that I know we're in the bullish side of things versus the bearish side of things. We're below that. So Pepsi continues to struggle. And even though it does have dividends, that's great, but it's not enough to have the dividends. That's the cherry on top. I want to see appreciation in the underlying stock, and it is simply not ready for prime time. So I would leave Pepsi alone. Now, we did look at Pepsi some time ago. That would have been Q1 of this year. Let me show you Coke. With just that little bit that you saw. Look at Coke. Look at the yellow there. That's neutral. That's a neutral trend. Look at what else Coke was doing. It's above the dots. So Pepsi and Coke, they're all sugar water companies. I know Pepsi is far more than that, but Coke looked a lot better. We bought it at $61.50. This is where we sit now. Had at the same time I bought Pepsi, completely different structure, right? I don't know why Pepsi was moving lower. It still is. So at some point in time, Pepsi will be ready. I want to be patient and wait for that. I don't want to sit in a position where I have to add as it goes lower and lower and lower. Think about how my money's underperforming if I do that. So that's a quick contrast between Pepsi and Coke. What else we got, Trish Boss?
That's a wrap.
That's a wrap. All right. Gang, thank you so much for being here. Hopefully, the last 75 minutes have opened your eyes to what's possible. You don't have to be a fundamental number reading math genius. Let the geniuses do the work. We're going to surf their work and big money by understanding what's happening on this chart. Don't underestimate the power of being an individual retail trader because we have the ability to see through price, through volume, what they're doing and basically coattail them. That's what I did back in 2008 when the world we thought was coming to an end. So hold the phone. Somebody knows more than I do. How do I recognize the patterns that they're leaving behind by their actions so I can build my portfolio? It doesn't matter the environment we're in. Even in April, we were buying. Even in Q1 of this year, we were buying. So there's always an opportunity to take advantage of something because somewhere something's on sale and we're going to go find it. All right. Okay, gang, thank you so much. Let me make sure I give you all that link. Simplertrading.com/growth strat. If you want the class and a quarter with me in the long-term room, $597 does it. If you're a Sector Secrets Mastery member and you want the class only, the Trish Boss has made sure it's a killer deal for y'all, $297. If you want to join me for a year and lock in a $497 yearly membership rate, which is insane. Otherwise, it's $1,000 a year, gang. Check out the Pro. You'll lock in that charter rate after the $897 for the class and for the room this year. You'll lock in, as long as you're a member, the $497 rate. Now, for those of you that are ambitious and maybe have whetted your appetite, say, Rog, if these are the indicators you use on longer term, can I learn to do similar things for day trading and swing trading? Absolutely. And can I check out what you're doing? Yes, for the next quarter, you can not only get the long-term class, and the long-term uh, mastery, but you can join me in the sector secrets mastery because that includes a long-term growth session. All right. So check it out. There's more details at simplertrading.com/grow hyphen strat. We've never really done anything like this here at Simpler Trading. So I really appreciate everyone saying, Rog, in a world of what's the stock market going to do tomorrow and 0 days to expiration, nothing wrong with that. But hats off to you all that said, I know there's a better way to grow my money. That doesn't mean I'm in and out, in and out, in and out, that I can use time. I just need a strategy. I need to understand how to do it and what to buy. So I give y'all a lot of credit because most people just don't have their head here. And it's really a shame. They're leaving a lot of opportunity and growth on the table. And if you want to think, okay, Rog, I never want to feel ever again like I did when you showed me that graph of things that are up 444,000%, 26,000%, beating the S&P. How do I find this stuff? Believe it or not, every one of these, darn near every one of these, shares a pattern, shares behavior. And that's what I'm going to share with you on the 19th. So I could not be more excited. All right, gang, be good to each other. And I'll see you on the 19th. And we will tackle this together. All right. Until then.